All right, ladies and gentlemen, I hope you had a wonderful weekend. I hope you got some rest because we are about to enter the most pivotal week of the year. If you're not aware, on Tuesday, we are going to be getting in the CPI, but then Wednesday, we are going to hear from Jerome Powell, and that's the last event of the year, man. That's it. After that, everything gets into 2023. So, we got a lot to talk about. I got a nice little breakdown for you. We're going to go over what is important. I got a bunch of plays for you. We actually did a lot on Friday, and really, we got some big bets on this one. So I don't know. I'm thinking I'm either going to make or lose like $30,000 on this one. I know it's big risk, but we're going to go over all of that. I'm going to need your random play, but actually, let's start with some pretty pictures here. So the first one, what I want you to see is just how important these CPI events have been. So since 2009, believe it or not, we have had the biggest reactions this year to the CPI. It is usually about a 3% move, and that is absolutely massive. So that's why Tuesday is going to be important. Again, we only have tomorrow and then Tuesday morning. That's when the data comes out. But now, since we are going to be getting the Fed, I want you to understand what is going to be really important here for Wednesday. And it is people talking about the Fed. Yeah, everybody knows they're going to raise, but when are they going to cut and when is it going to come down? So actually, believe it or not, the average rate between the peak rate and the first rate cut is about 11 months. Now, why I'm bringing this up, because on the CPI, on Fed Day, Jerome Powell is going to be releasing the summary of economic projections, and you are going to get the Fed's dot plot of where they plan to go from here. Believe it or not, the real big issue about the Fed and Powell this week, it is going to have to do with this policy path, and the market is saying, yeah, we don't believe Powell. We don't think he's going to hold rates, as long as 11 months. Again, just take a look at the last times, even December 2018 till July 2019, it was 7 months from peak to the first cut. And even in 2001, 2006, you could kind of see the difference. But why this is going to be so key is because, well, the market does not believe what Powell is saying. So that's why when we get the summary of economic projections, it will change this dot plot a little bit, or we'll see if it changes the Fed futures. That's what this chart is here. But essentially, everybody's cool with Powell raising rates. They know he's going to go to 50. Most people are expecting inflation is going to come down. However, a lot of people are thinking, yeah, Powell is going to stop raising rates by like April, May of 2023, and then he's going to be cutting it almost in half by the end of the year or even coming into January. Pretty much, people are expecting the first rate cut to occur around October or November after reaching a peak in May or June. So it's going to be interesting. We are going to do our homework. We're going to have all of it, but Chattadonia, I'm telling you, it's going to be a wild week. So drop your thumbs up on the video. Make sure you're subscribed, all that good stuff. And don't forget that we are live Monday through Friday. We're going to be live for the CPI. We're going to be live for Powell, youtube.com/the stock market. But we also have the random account generator. We're going to do this in the morning. We need your help. We need you to post your play, a random option play. Keep it below $100. Post the strike price, expiration date, all of that good stuff. And then we are going to pick a play tomorrow morning, and we're going to do good. We had the last one with Walmart, man. That one was a good one, too. So shout out to the chat, baby. Run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, ladies and gentlemen, like I've already said, this is going to be the most anticipated week of the year by far. Not only are you getting CPI, the next day you're going to get Powell. There's even going to be like SEC changes on the order flow and how that works. And I believe there's like one more event that I am missing. So the bulk of the action is going to be Tuesday and Wednesday. Tuesday, you get the CPI. Wednesday, you are going to get Powell. And I'm pretty sure it's going to be a week of a lot of follow-up too. But there's going to be a lot of events. I even have a couple more that we're going to go over. But the main idea here is 7 of the last 11 CPIs, they have led to a negative reaction. And like I showed you on that first chart, these are huge reactions for the data. Jerome Powell, in and of himself, on those FOMC days, he always brings a big reaction. But now pair that up with CPI the day before. I'm telling you, what could happen is going to be insane, both for the good or the bad, but this is probably the most important week of the year. So hopefully we got that out of the way. The second thing I want you to be aware of is that tomorrow is really going to be the final day of calm movement, more or less. Again, all of it starts Tuesday morning, so we got to see where we end up at, but tomorrow will be the final day to set up, because by Tuesday morning, you're going to get the pre-market move and then the intraday response, but after that, it's going to be taking in the new data. We're going to see if it affects bonds or the Fed futures, anything like that, and then instantly, everybody's going to be focused on Powell the next day. So want you to focus on that, but now don't forget, we've been talking about it. These are the guardrails, but even after seeing how Friday played out, and I'll show you something about Friday that was both good and bad, but watch for going below 3,900 by the CPI. I think that would be a bad sign, and then if we go above 4,000 ahead of the CPI, I would also think that is a little bit more exuberant. What I'm expecting is kind of we chill out leading into it. Otherwise, if we make a move too far in one direction, it might just add fuel for the coming event. So keep that in mind. But now this is what I wanted to show you, the good and bad of what you saw on Friday. So Friday was a dump, and remember, you had PPI and then the consumer sentiment. PPI dropped, but there was some areas that were sticky. That's why people didn't like it. It was food going up even though services went down, and then consumer sentiment was really good, but again, pair that up with the PPI. That's what made it difficult, because PPI often leads into the CPI, as we were talking about. So in this case, PPI dropped, but it didn't drop as much as expected. And now keep that in mind for the CPI, because people are expecting it to drop, I believe, to around 7.3 from 7.7. So even if it drops, but not that by that amount, people may not like that. But what I want to show you is that bond divergence we kept talking about. So remember last week, bonds were moving hand in hand. Then all of a sudden, market went down a lot. The bonds went up. Market was still down. Bonds kept going up. Market went up. The bonds went down. And then what happened on Friday? The market went down and the bonds came down. So this kind of ended that panic recession bin a little bit for the bonds, but this is what I'm still going to be watching here. However, the good sign on Friday was that, hey, they moved hand in hand. I like that. It closed the gap a little bit, but we want to see, are people still rushing to the exits and waiting for this imminent crisis or imminent Fed pivot? Well, that would mean they would buy the bonds. So that is what we want to be looking for. Also, oil as well, too. So hopefully you've been following along, so that makes sense, but that is all your second key. And now coming into the final key, you are also going to be getting a big ECB meeting, I believe on Thursday, and then on Friday, it is going to be a huge option expiration. It's a triple witching, but I'm sure you guys have probably made a lot of the plays on December 16th. I think I even have some in my portfolio, but this has been a big date. A lot of money is on the line, so the argument of there being a much larger follow-up move, that is still going to be on the table, and I hope you're used to this by now, because sometimes people get frustrated when they're like, wait a minute, I thought we're focusing on this event. Now, all of a sudden, it's like it gets pushed up for the follow-up. Well, yeah, it just depends on how it plays out. So even on last Friday, there was a lot of money on the line. I mean, the market didn't really care. It paid out a lot of in-the-money puts, but usually on some of these big expiration days, sometimes we'll get a big move, and then right after expiration, that is where all the action happens. Now, granted, this week is going to be packed from Powell all the way down to the CPI, and then, like we're saying, the ECB and a couple others. I think you're going to get some earnings as well, too. So keep all of this in mind. I think tomorrow should be relatively chill, but it's going to come down to the interpretation, taking the CPI, packaging that into Powell, and then beyond just what Powell releases, you got to wait for the press conference. So let us get into the plays. But right off the bat, like I said in the beginning, we'll go over what I'm holding. I added another ES on Friday. So I have 3 long ES and then 1 short NASDAQ. But pretty much I'm willing to play big on this because I think you're going to have so many events. It doesn't mean I think I'm going to be right. Again, I'm going to go with what I believe there. It started out with a trap. I was able to average down a little lower. But what I'm trying to say here is I think we are going to be possessing, again, 3 to 5% potential moves. And that could be some big paydays, but it does not come without any big risk. So we'll go over the plays there in a second, but I'm going to start with this first one because I went with options as well as shares on this play, and I really, really like it, but the play is Boeing. So as far as the options, I grabbed a December 16th 205 call. I believe that's for what, one or two weeks out. I grabbed them for 18 cents, 10 of them, but then I also have about 150 shares, and I believe my average is at 180.69. So why I decided to go with it, why I even went with options, there was big news on Friday of Air India buying a bunch of jets from them, even over the weekend, even today. Even Reuters put it out. They included Airbus alongside of the headline. So apparently Air India is going to be buying from both. We haven't had a confirmation yet, and then even Boeing had some NASA news finalized after the bell, but it seems like it could be very big news. They've been holding up. Like I said here, it could also be some defensive exposure. Again, think LMT, RTX, and I'm still in those. But the whole idea is I like that news. There was even a gigantic block trade of about 0.2% of the entire float in one candle. It was like 1 million shares. So I like it. I like how they've been holding up. The thing I don't like about Boeing is that I think they're up like 50% over the last month or something like that. So we'll see how it plays out. But I am holding those shares in options. I think this could be a good one, but we'll see if Powell or CPI ends up derailing this one. But that is play number one. Then play number two, I keep bringing this one up and I keep going back and forth on it, but TSM, well, the chips, they have been the most beaten down in the last quarter, even the last month, but TSM is not going down. We're getting a lot of news out of China that just keeps getting better and better as far as the reopening, even though there was kind of some negative news about the amount of cases rising over the weekend. So I'm thinking for a small flip on this one, I only went with about 50 shares at 81.52. So even when we played them, it hasn't really been more than $200 both ways on 50 shares. At the very least, they have stayed stable, but I'm definitely going to be watching this one coming into this week. That is play number two. And then finally, play number three, baby, XLU, the utilities. So we've been bringing this one up. This is the one also Morgan Stanley, Michael Wilson from Morgan Stanley also brought up, but I'm having really good feelings about this one in the midterm, so maybe I should shoot myself in the foot now if I'm going off of feelings, but I think this one is going to be decent. I don't think it'll hold up if things really get crazy, but like I've been saying about it, it's a nice $10 risk to reward, but it's also a very slow mover. So I don't think I've moved more than like $10, $20 on it or something like that. So that's why I'm liking it. It also has a dividend coming up. And then again, it protects against any recessionary or stagflationary environment. So I don't think it's without risk, and it's definitely trading at a premium, but I've been saying I want to add to it. And now after Friday, I think I finally went red on it. So I will be looking at this all throughout the week, and on Powell Day, on CPI Day, I want to see how the utilities perform. But those are the main plays. As far as everything else, I took a bunch of different plays on Friday. Again, I added to the ES, so now I have 3 of these. Remember, I got trapped into them, but I was much, much higher. So even though it's a bigger loss now, the NASDAQ was not protecting me the same way. So unfortunately, I'm down on both of these now, but still holding this one. But now my average is much, much lower on way bigger size. So pretty much 4,000, right above where I think the top end is where I will go break even on this one. So it's a play on crack right now. So we'll see what happens with it, but I'm still holding those. I did add to Yang. I don't think I have it up here. Where's Netflix? That one was down a lot. Still short those 50. I'm going to look to add again to that one, but Yang, we've been down on it. It was like in between, I think like 10 and 13 bucks at 12 bucks. So I figured I'd add a little bit more. Only with 100 shares, we already had 200. So now my average price is like $14.50. But just in case anything with China turns around, I wanted a little bit of that exposure, and I thought it was good. And we kept getting a little bit more of the Apple news, but I did that. I took the tax loss harvest on Costco, even the wheat shares, and I think that was about it. I opened up the TSM2, and then now I'm still holding those Netflix. I still have the RTX. Again, that was another defensive one, down 80 bucks on that, down 40 on the TSM. The old Qualcomm is still down. Disney, I'm still clapped on. We got rid of all the Amazon and Tesla too and all that. I took profits on that. And then here are the BA shares with about $172 loss, or like $1 a share, because we have 150 shares. So that's pretty much it. Again, I'm going to really just be focusing on these. I closed the bond play on Friday. It was only down 400. Remember, we were coming off big gains with it, but my logic was, well, hey, I have the ES long, I have the NQ, but I wanted the bond plays, but just in case that inverse return in the market went down, I didn't want to be down on an ES and then be losing on a bond play that hasn't been playing how I wanted to. So pretty much I'm going to wait for the confirmation on CPI and as well as Powell, and then we're probably going to go hard on the bonds this week too as well. So hopefully you've been paying attention, baby. But that is pretty much going to be it. I think it's going to be an excited week, Chad. Again, I hope you get some good sleep. I hope you're rested. I hope you're relaxed, and just just remember, man, this is leading us into 2023. You've already made it to the end of a historic year, and I think we're about to end it with a bang, baby. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, it's all about right now. You got to focus and enjoy the moment. But I also want you to make sure you bargain a little bit with the future. Oh, man, y'all don't feel me. What that means, continue to focus ahead. Think about that long term. Think about where this year is going to go, what you learned already from this year. And remember, you don't have to go crazy now. Whatever you could withhold now, hopefully that's you bargaining with the future to get it on the back end. But Chad, you're already ready for this. Let's do our homework. It's going to be exciting. I know you're ready, man. So drink that water. Stay hydrated. Stay healthy. I love you all. God bless you, Chad. And are you ready? I'm ready. I'm excited. I'm cool, calm, collect. I told you too. I hope you got the same thing, baby. It's game time, baby. And you're made for it. Okay. I'm not even getting awkward. Okay. I love you, Chad. Have a wonderful weekend, or even the weekend's over now. It's game time, baby. Hard.